Ladies and gentlemen, what's going on? My name's Henry, and today I want to talk about put options because far too many people are in love with call options. They cuddle call options at night, they go ahead and buy call options, but too few people are actually using put options, and a lot of people understand what put options are, but actually from all the students I talked to in the private group, nobody knows how to use them properly. So here's the thing, and I bet there's something that you didn't know. Well, Warren Buffett, who is a stock investor, billionaire, and everybody knows him for owning a lot of stocks, is actually an option trader in disguise. That's right, I bet you can't believe it, but Warren Buffett trades a whole lot of options. Now let me tell you exactly why you don't know that Warren Buffett is an option trader. Reason number one is because companies have to file 13Fs. To be specific, hedge funds and money management firms, they have something called a 13F where they have to reveal their positions. However, they don't have to reveal their option positions, and this is the whole reason why you get to see Warren Buffett's stock portfolio, and there's so many videos out there on which stocks Warren Buffett has. However, nobody knows which options Warren Buffett has. And actually in 2008, he sold a whole lot of put options. So in this video, I want to show you guys exactly how I sell put options to create weekly income, how I use put options to leverage getting into stocks for cheaper prices, and overall why selling put options is probably the single best thing that you can do. And if you're not doing it, then you're just leaving a whole lot of money on the sidelines. Today, I'm going to open up my portfolio pretty much right now. And I'm specifically going to show you selling put options on stocks that I want to own, because the most powerful way to sell put options is not by selling put options on GameStop or AMC or some crappy stock out there. It's actually selling puts on stocks that you would like to own, because the worst thing that can happen is you get to buy your favorite stock for a cheaper price than it's trading at in the market. So while most people and most investors are like, well, hey, Apple's at $100 per share, I don't want to buy it at $100, I want to buy it at 95. Most people have to wait, or maybe they go ahead and put a limit order for buying the stock at $95. They cross their fingers and they just go ahead and wait and kind of pray, hoping that the stock goes down to $95 so they can buy the stock for the price that they want. However, what if I just told you that you can do the same exact thing and wait for your favorite stock to go lower? However, in the meantime, as you wait for the stock to go to the price that you want to buy it at, you get paid to wait. That's right, I'm going to show you how to get paid money to wait to buy your stock at a good price. All right, let's take a look at Uncle Henry's portfolio. So I got $1.8 million right now, which is a lot of money for me. I did not even believe this number when I look at it every single day. However, let me tell you, it's actually not rocket science to get to this value in your portfolio. It just takes time, specific knowledge, and obviously you do have to save and put money away, which I have been doing. In the last 3 months, I have made nearly $600,000 in my portfolio, and a majority of my portfolio was built by me trading options. And specifically, I have traded very simple strategies like selling puts, which I'm going to discuss in this video, and also by using covered calls and the wheel strategy. All three of these videos I'm going to link for you guys in the description below, but in this video we're going to focus on selling put options. I've also initially grown this portfolio by using spreads. Now spreads is something that I'm doing in my private Discord. I currently have a challenge where I'm taking 7,000 to 17,000, and the current portfolio value is over $8,000, and it's only taken me about 6 weeks. So honestly, selling put options is not that complicated. We're going to briefly go over my portfolio, see all the put options that I have open right now, and then I'm going to do some technical analysis, find some stocks that I really like, and sell some new put options so you guys can see exactly how I do it, the way I think about selling put options, what I consider safe, and what I consider to be a good investment. All right, so let's take a look. I have NEO put options. Essentially here, what I'm doing is I'm selling puts on NEO because I'd love to own NEO at a lower price. Currently selling the 38 put contract, and I'm currently up $100 on this position. Now I'm also doing this with Palantir, I'm doing this with Square, I'm definitely doing this with Tesla. This is currently a Tesla call option that I'm up $3,600 on. Now I only have 400 shares of Tesla because I unfortunately sold shares of Tesla. I'll also link that video for you guys in the description below on the biggest mistake I ever made. I'm pretty sad about it, and the only thing I can really do is move forward and continue to educate myself, because I'm still learning every single day, although I'm nearly at 10 years of experience for trading options, and I grew my portfolio pretty much by myself without even putting that much money into it to $1.8 million. I still make mistakes myself because I'm only human. Now, selling BABA puts, I'm a big fan of BABA, so I'd love to own BABA at a cheaper price. Here are the Tesla puts that I mentioned earlier. I have some Snap puts, and that is pretty much it. And then I have some longer term put contracts on Tesla as well. I have 5 put contracts I sold for Tesla at $450. So can you guys imagine that? I went ahead and I sold 5 contracts on Tesla, basically saying I'm ready to buy Tesla at $450 per share. And the stock was probably around $700 per share when I initially sold these contracts. Now I'm up 19 $15,000. And all I had to do was basically say, I'm ready to buy Tesla at $450 per share, which is obviously a steal. Now we know it's obviously a steal, but when I did it even back at $700, I thought that it was a steal. I'm going to show you why I thought it was a steal, but essentially, as you guys can see here, this strategy is not rocket science. It's basically just selling puts on stocks that you want to own. All right, so I opened up Yahoo Finance because I want to show you guys some technical analysis. I want to show you exactly how I think about selling puts, and the only stock that I can currently think of that I would not mind owning more of without having to do a whole lot of research is Palantir, because I already have a position on Palantir, and I won't mind selling more put contracts on Palantir because I know I can't go wrong with a growth stock that has fantastic management. So the first thing that I end up doing is I go to charts on Yahoo Finance. Now there's three things that I look for. I'm going to exit out of them right now and show you exactly how I find them from scratch. So basically anyone can go to Yahoo Finance, you can go to charting, and then usually what I like to do is I like to go to a 3-month chart, or I like to go to a 6-month chart. The 6-month chart gives me a very good understanding of where the stock has been traded at, where it's currently trading, so I can basically do a little bit of an evaluation. So right now with Palantir stock, I see it's about $26 per share. Well, the good news is it's not really trading at the highs that it was at $28 per share. I also see that it went as low as about $21 per share, and currently we have a very good momentum going up. So this gives me a lot of information. By just putting my eyeballs on the chart, I already have a good idea. Now what I'm going to do is I'm going to go to indicators, and the very most important indicator is basically just moving average. It's simply said, I go to about 50 days. Sometimes I do 60. I'll do 60 days in this scenario. Now, a lot of people and a lot of my students will ask me, Henry, do you basically go for 30 days? Do you go for 60 days? What's the best time period to look at? I tell all the students that essentially what you want to do is you want to go for either 30, 60, or 90 days. All of them are fairly equal. 30 days is not better than 60. 60 days is not better than 90, and 90 days is not better than 30. All of these time frames basically give you an understanding of where the stock is traded at historically and where the stock currently lies. It's just one data point that I take into account to give me a better understanding of where I emotionally feel comfortable selling puts, because there's no actual statistical mathematical answer, because the stock market is not really a mathematical game. It's based on human emotions. So I like to understand where the stock is traded at in relation to other investors, in relation to the market, and in relation to other people that are investing in the stock. So what you guys can see right now is that Palantir is currently $26.63. However, the moving average is $25.45. Now this tells me two different things. First of all, if it's below the moving average, then you can call the stock undervalued. However, in this case scenario, I'm going to be using my charting knowledge to tell me that because Palantir was trading below the moving average, but now it's rising significantly and consistently over the past couple of weeks. In fact, it has been about 4 weeks since October 4th. Palantir traded as low as $23.17, and we have consistently seen this trend line go higher, and we have broken past the moving average. And I was selling puts back at that level because I've seen Palantir break past its moving average. However, now I expect Palantir to remain at this price because not only has it broken past the moving average, but has consistently stayed there for the past week or so. This is a very strong sign of confidence because stocks oftentimes go past the moving average, but then they end up breaking down and they go lower. However, there's two things that happens at that point. Sometimes stocks end up breaking down at that point because investors lose confidence or they take profits, or the stock ends up going up and shows continuously positive momentum. And that's what's happening with Palantir stock. So for me, I'd be very comfortable to sell puts and get in on this stock at around $25 per share because that is the moving average. However, now what I'm going to do is I'm going to add an additional layer of complexity. Now, one of the layers that you will already see because I forgot to remove it is the RSI. Now, the RSI stands for Relative Strength Index. I haven't studied RSI for a long time, but it's a pretty simple technical indicator. Basically, all it says is a stock that's trading around a 20 RSI means that it's oversold. Too many investors have sold the stock and it's become very cheap and a very good discount. Now, if the stock goes past 80, which has happened to Tesla back when it was about $1,200 per share, that's actually why I wasn't buying any more Tesla and I wasn't investing any money into Tesla shares because I was a little bit weary of how high the stock has gone. And specifically looking at the RSI of Tesla, it was over 90. So looking at Palantir, the current RSI is about 60. And this doesn't give me much information on this stock being undervalued or overvalued. It gives me the information that it's about where it should be. Now, the third indicator that I think is the most important before you go ahead and sell put options and simply pick a strike price that you are happy with, I'm going to show you, you have to understand what strike price to pick. And this is one of the biggest questions that I always get in the trading group that I have. So what I do is I go to indicators and I go to Bollinger Bands. Now, Bollinger Band gives you a range that the stock is likely to trade within based on statistics, but you don't have to be a statistics nerd. You don't have to have a finance, economics, data analytics degree like me. I was a little bit of an overachiever back in college. This just gives you a very simple technical tool that is done for you literally copy paste in Yahoo Finance or any other brokerage platform that involves tools that allow you to look at the Bollinger Band. Right here, the period says 20 days. That's pretty standard of Yahoo Finance. I just go with 20 days because that basically gives you 1 month of trading, since most months have about 20 trading days. Now, 2 standard deviations just means how likely the stock is to move beyond the standard deviation. And a standard deviation is just based on the bell curve, okay? A bell curve just tells you how likely a stock is to trade within a certain range. So 2 standard deviations is going to include 95% of the time that the stock is likely to trade within a range, and 5% of the time it's going to trade without that range. Stocks, just like medicine, nothing is guaranteed. The same thing goes with many other parts of life. Nothing is really guaranteed. So you can only put a probability on an outcome occurring. So if you want to be safe, 2 standard deviations is good, but if you want to be safer, you can also put 3 standard deviations, which would go from 95% confidence interval to about 99% confidence interval. All right, I'm going to click save, and now you guys see a very interesting picture. These yellow lines are the Bollinger Bands. Again, it tells you what range a stock is likely to trade within, and it does all the math for you. Right here, you can see that Palantir is nearing the top of its Bollinger Band, which means that it might be getting a little bit expensive. However, the middle of the Bollinger Band is again about $25. So again, this proves my point that selling put options at about $25 is going to be a safe and good level to buy Palantir stock at a reasonable valuation. Of course, it's even better if you can sell put options at the 23 strike, and I'm going to show you 2 different things that you could do, something for a safe investor and something for a little bit of a riskier investor. All right, so going back to my portfolio, I'm going to type PLTR. We're going to open up PLTR. I'm using the Robinhood platform. You can use any platform that you like. I'm just used to the platform. It's not perfect. However, I do enjoy using the platform because I've been with them probably for going on 7 or 8 years now, and they give me really, really cheap margin, which I also like. All right, so my average cost is $25 per share. I'm up $2,387 on the stock, and it compromises about 7.2% of my current portfolio with an investment of roughly $35,000. Now, the current position that I have on Palantir is a 24 put, so I'm ready to buy 17 contracts of Palantir, and because each contract is worth 100 shares, I'm basically saying right now, I'm willing to buy 1,700 shares of Palantir, and I'd be very happy to buy that stock at $24 per share. And as you guys can see, I'm actually flat on this option right now. I've neither lost or made a dollar. Now, what I'm going to do to open up a new position and show you guys how this would work is I would click trade Palantir options. Now, there's a number of things that you can do. First of all, you do want to go to sell puts. You want to make sure that you're selling a put and not buying a put, because if you're going to buy a put, it's going to cost you some money. And if you want to spend some money, that's totally fine with me. However, if you want to make some money, then you want to go to sell put option. And this is where I collect weekly income. I'm continuously selling options because during my time at Goldman Sachs, I have learned that statistically speaking, it is more profitable to sell put options. And that's what I teach all the students in the private group. So if you want to follow those trades, you can do that live with me every single Monday or Wednesday, or you can just pay attention in this video and I'll show you some insights on how I do it anyways. So you can go to November 19th. This is going to be a little bit less than 2 weeks out in terms of expiration. And I'm going to go down to the $25 level. So as you guys will see right here, this 0.69 is 69 cents, but because each contract is 100 shares, this is actually going to be $69. Now, this trade right here is going to be a $69 trade where you will collect $69 worth of premium, which just means you're going to get $69 into your account right away at the very moment that you sell the option. It's pretty exciting because you get to calculate exactly how much money you earn right away, and you know what level of risk you're taking. Now, Henry, how do I know what level of risk I am taking? Well, the very easiest thing that you can do is you can look at the strike and it says 25. So in this scenario, you're only going to be putting $2,500 worth of risk on the table because the option is $25. However, each option again is worth 100 shares. Therefore, this is going to be a $2,500 investment, and you're going to be collecting $70 for putting up the capital at risk. However, most people are going to scratch their head and say, well, I don't want to lose $2,500. Well, hold on there, Tiger. You will not lose $2,500. You're just putting $2,500 on the table, saying that you will buy 100 shares of the stock. If you're happy to own the stock at $25, as I was explaining before that I would be, then you don't really have any risk, because the worst thing that can happen is you get put the stock at $25 per share when the stock is currently trading at $26.87 per share, and at the same time, you're collecting $69. All right, so what I'm going to do is I'm going to click continue, and I'm going to put 3 contracts here, and that is going to cost me a little bit more than $2,500. It's going to cost me personally $7,500. However, you guys can see right here that I'm going to be collecting $207 worth of premium. Now, another big question that I get from a lot of investors is, Henry, do I get to keep this $207 either way, or do I only get to keep it if it doesn't touch $25 per share? The good news is when you sell put options, you are guaranteed to collect the premium no matter what. Whether stock goes down to $25 or it goes to $30, whatever the stock price goes to, it actually doesn't matter because you collect the premium at the very moment that you sell the put contract, regardless of what happens to the put option. Right now, what I'm going to do is I'm going to put $67, and the reason I'm doing that is because I want to get put the contract without wasting any time in this video, and I'm ready to take a little bit of a hit in terms of dollars. I'm only going to be losing $3 to $6, which is totally fine with me as long as I get executed fast. And there you go, guys. I got executed. I collected $204. And again, I put up a collateral value of $7,500. And again, this $7,500 is just going to be held on the side, and it's just going to be ready and good to go to purchase Palantir stock if it goes down to $25 on November 19th. However, if it does not go to $25 on November 19th and it goes to $25.50 or $25.75, if it stays above $25, I do not have to buy the stock. I will still get to keep the $204. And on November 22nd, that Monday, you can bet your pants that I'm going to be selling put options again and collecting another $200. Now, if the stock does go down to $25, so be it. I'm very happy to own the stock at $25. Now, real quick, I'm going to show a lot of investors on how to buy the stock at $23. Let's say that you're not so comfortable buying Palantir stock at $25 and you want to buy it at $23. However, when you look at the 23 strike, you ask yourself, well, $25 is not that much money and I want to make more money. So the only way to make more money is by either getting closer to the strike price, which gives you more risk, or by going out further in terms of dates. So let's say you want to make some more money, but you don't want to go any closer in terms of strike price because you're set on the 23 strike price. So what we're going to do right now is we're going to go to the December 17th strike price. And now if you take a look at the 23 strike price, you will see that you can collect a lot more money without having to take more risk. Now you can sell the 23 strike price on December 17th and collect $58 instead of $25. This is how I leverage put options to make weekly income and grow my portfolio fast. This is also how I get paid to purchase my favorite stocks. If you guys like videos like this, leave this video a like, subscribe to the channel, and I also have a free email newsletter that you can sign up for in the link in the description. Thanks for watching, and I'll see you guys in the next one.